There's something unbelievable that's going on. The IRS, they're at it again, and we're going to talk about it. Okay, so I wanted to talk about this. You may have heard of it. I got a call from one of the radio stations wanted me to do. I was out of town, so I couldn't do it. But they wanted me to talk about this ProPublica thing. Maybe you've heard of it, maybe you haven't. But if you have, or if you haven't, let's talk a little bit about it. Okay, so what's going on is this ProPublica, which is this left-leaning group. That's the way they describe themselves. That's not how I'm describing them. They have come across some tax returns of the very wealthy. Elon Musk, name them, Bezos, Bill Gates, all the richest people in the country, and they've come across their tax returns for the last 10 years, and they're making a deal about it and telling us all about how this is proof that we need to change things in America. Now, you may remember this. Now, a couple weeks ago, the IRS came out, or actually the Biden administration came out and started telling us that we tax our thing. We're taxing us all wrong. Okay, what we're taxing is our income. What we should be taxing is our wealth. So what does that mean? Right. So what that means is that every year, what they want now, this is also tied to something else that we talked about on this show, and that's the financial institutions reporting all of your banking information to the federal government every year. Every dollar that comes in your bank account, every dollar that goes out is going to be reported. They wanted. Now I'm not going to say they're going to, because I hope they don't get this passed. But that's what they're trying to do. They're trying to get this reported, that every day. Every year, the IRS gets all your banking information to make sure that you're reporting all of your income. And so you can't get any income that they don't know about. And this all goes back to this. So the ProPublica comes out with this. And what I mean by this, the IRS is at it again, is because this goes back to what the Lois Lerner scandal of some years ago, where the IRS was using their power to stifle free speech of those that they disagreed with. And this is very similar. It's an abuse of power. Well, hey, Steve, Attorney Leahy, how can you say it's an abuse of power? Well, that's what we're going to talk about. Okay, so what I want to do, I want to pull this up. Let's pull this ProPublica report up. Okay, so this ProPublica report is again, the secret IRS files, trove of never-before-seen records, reveal how the wealthiest avoid income taxes. But this is a misnomer. Right? They're talking about income taxes, but actually they're not talking about income taxes. If you read the story very closely, they're comparing what they paid in income tax to the wealth that they have. So when the government, right, starts jacking up all the lowering interest rates, no one wants to put their money in a bank account because there's no interest rate there. You can't save money in a bank account, right, and make money on interest. Like it was designed to do. So when they lower the interest rate so much, instead of putting money in a bank account, people put money into the stock market. And what does that do? Just supply and demand makes more people in it. It raises the value of the stock market. Right. The richest people the richest people in our society and every society, they own assets. They own stock. They own property. They own other pieces of assets. And as this inflationary and also the stock market, that raises their value. And so the very rich, all their stocks go up, so they make a lot more money, or they're worth a lot more money. In our country, we don't tax on what's called capital gains, right? You pay a capital gains tax when you sell your assets. So if I bought something if I buy a new building and I paid $25,000 for that building, and every year it goes up 10%, so 2,500, and on and on and on, 2,750, and on and on and on, right? I don't pay taxes on that value increase until I sell the property. So some years later, I'll sell that $25,000 piece of property. I'll sell it for $150,000. Now I have to pay capital gains tax on the difference between what I sold it for, $150, and what I purchased it for, $25,000. So I'm going to pay tax on $125,000. What they're trying to do is they're trying to change the way we pay taxes. So every year, if your property goes up 2,500, 10%, you're going to pay tax on that every year. So you don't wait till the end. You're going to pay tax every year on the increase, right? So this is a way, and of course, this is what's so sneaky about it. And this is why I say the IRS is at it again. Of these people, the wealthiest people in the world, and they had their tax returns. Who has those tax returns altogether? Well, the IRS must have them, right? Yes, it's a felony to access, only access, not reveal, just for an IRS agent to access unauthorized tax returns. It's a felony. They go to jail for that. But here they released all of these tax returns from all of these wealthy individuals. And then they're using them and say, see, they're not paying their fair share. They're not paying their fair share. And so and so they're using this as a cudgel against all of us. Because in the end, right, the very wealthy are never going to pay what you think they should pay. Right, because that's just the way our system works. Unless we start going after them and taking all of their assets away from them, they'll never pay because they have professionals to help them avoid the rules or use the rules to their best benefit. So in here, when we had this several months ago, when Trump's tax returns came out and said, see, he didn't pay any income tax. He's a thief. He's a liar. He's a cheat. But it turns out he wasn't a cheat and a liar and a thief because he was using the tax code as it's written to pay as little taxes as he could. Makes sense. I believe. Now, what everybody's up in arms about is that they're saying, well, these wealthiest people, they don't get a paycheck. Right. So they don't really have a lot of their wealth isn't paid as income. Right. They're not paid as income. Most of their wealth comes from assets and the buying and selling of assets and the assets appreciation and all of that. And they pay those taxes, capital gains tax, when they sell those assets. So as long as they don't sell the assets, they're not going to pay the tax on it. And so people are up in arms about this. And they're also, well, see, then they'll wait till and then there's, okay, when you pass away, and that, let's go back to that piece of property that I had earlier that I talked about. I bought it for $25,000. It's now worth $150,000. If I pass away and it's worth $150,000, and when my heirs take that property, they take it at the basis of $150,000. So all of that money, the difference between the $150,000 and the $25,000 is never going to be taxed. Right, because it's going to go to the heirs of that person, and so they're angry about that too. That's not right. That's not fair. Now, you could say it's not fair. You could say it, but that's the way it's always worked here. And again, you can change that. That's what laws are for. You can change them. But I happen to think that you're taxed on your income, and when you buy something, you shouldn't be taxed on the appreciation. Now, I want to talk about this. This is NBC News. Leslie Book, ProPublica's report on tax inequity could hurt Biden's push to make the system better. Well, this argument is, and I just want to read a little bit of it. This week, ProPublica published a treasure trove of information on the financial lives of some of the wealthiest citizens. The info confirmed what many experts already know. There is one tax system for the rich and another for everyone else. Actually, there's only one tax system, but the rich understand how to hire professionals to help them follow the rules to the way they're written. So they're not breaking any laws. Many of these strategies you can implement if you want to pay someone to help you, or you could try to learn it yourself. Right? Well, they don't have to, because they have the money to hire the best tax accountants and lawyers to help them follow the rules. And I don't want to say avoid taxes, because all they're doing is following the rules. These laws, they're put in place and they follow the laws, right? Donald Trump will say he was audited every year for many, many, many years. So they get audited all the time, and they're following the rules. Now, if they want to change the rules, they could change the rules, but they haven't changed the rules. So far, all of these, now, you may not like it, that they're not paying enough in taxes, but in the end, they're paying what the law requires them to pay. Would you pay more than the law requires you to pay? The answer is obviously no, you wouldn't, or at least most people wouldn't. And again, if you wanted to overpay your taxes, you can do that. And I've seen people, in my opinion, many small business people overpay their taxes every year because they don't structure their business correctly. And so where there's savings that the law allows, they don't take advantage of it because they think, that's not that much, but it is a lot. So if you're running a small business and you're thinking, hey, well, this isn't fair, make it fair. Okay. Follow the rules. Hire someone like us to help you tax plan, structure your business correctly, avoid the taxes that can be avoided. Use the tax code to your advantage. It's there. Okay. Use it. That's why I always say that the small business person pays the most. The entrepreneur in our society pays the most in taxes because they don't avail themselves to the rules and regulations that are available to them. Okay. So do that. Take advantage of them. Okay. So that's my first piece of advice here. Okay, so let's go back to this. Okay, let's see. By using perfectly legal, and here it is again, perfectly legal and straightforward strategies like holding assets, borrowing money, and passing the assets to family members at their death, wealthy people can essentially choose whether or how much income tax they want to pay. And that's not actually true because now you could say, well, they don't pay taxes. The wealthy pay tax on everything. Okay, so they're paying sales tax and transaction taxes and all these other taxes that they're paying. So it's a misnomer to think that they don't pay any tax. And we can look at them and say, and you can look at their income tax and say, well, they're not paying any income tax, but they're still paying taxes. Okay, now in our society, we've decided that that we should encourage people to buy and hold assets. It's good for the economy. It's good to build wealth that way. And if the government comes in and starts taxing you as you build the wealth, well, that kind of takes away the whole incentive and people won't hold these assets and won't try to build wealth. Maybe that's what they're after. And again, I think this goes back to what the IRS is doing. The IRS is the one that, now you may have seen that on the Senate. Some senators have said, we're going to get to the bottom of this. We're going to find out who leaked this. They're not going to find out who leaked it because who leaked it? They leaked it. Who else could have had this information? This is the information only the IRS would have. And as I mentioned earlier, it's a felony to even look at it, let alone reveal it. Now, ProPublica says we don't know where it came from. Well, somebody knows where it came from. Who gave it to them? It didn't show up on their doorstep. I'll grant you that. What is nominally progressive tax system where higher income taxpayers pay a greater share of their resources as taxes is in reality a system that allows the world's richest man, Jeff Bezos, to pay no income taxes in 2007 and 2011. Well, again, much of his wealth doesn't come from income. And you can take capital losses when he's investing in things and you lose the capital loss, and then you can offset capital gains with those losses. And I want to just point this out again. It's perfectly legal. It's legal and straightforward. Again, you can avail yourself to these things. Now, it's easier for them, obviously. They have more money. But here's the thing about billionaires. Everything's easier for them because they have more money, right? So that's just the way and if you believe that somehow if they change the rules and take more money from them, that your income taxes are going to go down, I think you're mistaken. That's not going to happen. So what we should be doing here, what we should be concerned about is two things. And let me go back and get out of this because I don't want to read this whole thing. But there's two things that we should be concerned about. Okay, first, who released this information? Where did it come from? Why we need to get to the bottom of that. Okay. Now, in this argument, in this article that I was just talking about, what they're saying is if they can't protect the richest people and their tax returns, how are they going to protect your bank account information, which is what they're trying to get now, right? They want your bank account. How are they going to protect that? They can't protect tax returns. So they're not going to be able to protect your information. And the second thing is they're coming after all your assets. So now we have our real estate is going up, right? As the real estate goes up, maybe I own a home that's worth $300,000, and it went up. Let's say it went up 10% because then the math is easy. Okay, it went up 10%. Now it's $30,000. Now we're going to get to the end of the year, and the IRS is going to say to me, "Okay, you had $100,000 in income, and you have to pay 20% in taxes. Oh, that's $20,000. You lost $20,000. Oh, but your house went up $30,000 in value. We're going to add that to your $100,000 in income. And now you're going to pay tax 20% or more. Maybe that pushes you into a new tax bracket at $130,000. So now instead of paying $20,000 in taxes, you're going to pay $26,000 in taxes. Where's that other $6,000 going to come from? You can't sell your house to get the money and pay them. It's going to come out of your paycheck. It's going to come out of the money you use to live every month. So this is the problem with this. This is why, and these are the two things that they're trying to pull a fast one and the IRS is at it again. Let's stop them. Let's not allow this to happen. Let's understand that they're trying to cheat us all, and they're using our envy of the rich to do this. And they're releasing private information illegally, and they're using, and nobody's asking about it. Why aren't they asking about this? Nobody seems to care. That's just the way it is. No, it isn't the way it is. And when it's your information, as they did with Lois Lerner, and they went after and they took that information and they went after those people that gave money to these organizations and started auditing them too, right? For political purposes. That's what's wrong with this. That's why we can't let it happen. So let's stop it. Let's not allow this to happen. Let's not let the IRS do this again. Thanks for listening.